Hi, welcome to the Funding Blueprint, Unlocking Startup Success, presented by StartHub. I'm Cody Goff, and today you're going to learn about how much of an impact your attitude can have on your chances of getting funded. How much of an ego should you have? And how can you appear confident without appearing off-putting to potential investors? Plus, when is it okay to say, I don't know, when an investor asks you a question about your business? And when is it not? Here to answer these questions and share lots of other wisdom is today's guest, Vlad Cazacu. He's a second-time founder and is currently co-founder and CEO of Flowlie Technologies, which is a data analytics platform for the private markets. If you're a founder who's looking to raise VC money, then check out Flowlie for your secure document sharing. We'll talk more about Flowlie later. Vlad is also a published author of a best-selling book on the venture ecosystem called When They Win, You Win, a more human approach to supporting entrepreneurship. And I had a lot of fun talking to him. So here's our conversation. I just want to dive right in and talk about, from the VC side, what jumps out to you when you're looking at proposals or you're assessing a startup? Like, what's the thing that catches your attention and you're like, oh, this is a real possibility. Like, I think I want to sink my teeth in more.
Sure thing, Cody. Really pleasure to be here on the podcast today and diving a little bit deep on some of the experiences, some of the stories. Happy to start there. And I would say, looking back at some of the founders where there was the most conviction in the companies that we backed, was really a lot of intellectual curiosity around the business at hand, right? And I think a lot of founders are looking at VC conversations and are really missing the biggest question out of everything, which is, why is this a company worth building, and why hasn't this been built before, and why are you the person building it? And I think there are certain founders who think this way, that are able to articulate it properly from the very first conversation, and it sticks to you, right? You have a half an hour intro call and you're like, this makes sense. Let me dig a little bit deeper. And I think that's really the point of the very first call. So the founders where this jumped out were able to do this in probably even the first 5-10 minutes of that first conversation. I can give some examples of some of those people, but that would be the blanket answer to it.
It's a great answer. So, I mean, it makes sense, right? Conviction. You know, if they want your money, you want to know that they believe in what they're doing. And they really, they're just shooting for the moon, right? Is pretty much what you're saying?
It's that, but it's also the ability to have intellectualized that problem at hand for a period of time, to understand it deeply and understand that there's a clear opportunity for this to build a business in. Right, like for example, Carlos and Wasim, two co-founders of Valia, one of the companies that I backed at pre-seed a while back, they have spent so much time thinking about the real estate space in Latin America and realized that there's an imbalance between the US, which has an MLS, multi-listing system, where you can go and search houses, compared to Latin America, which doesn't have one. So they figured out a very unique way to create a workflow automation tool that generates the data that they need to create a mini MLS for Latin America. And that is a very unique insight that you only get by truly understanding the incentives of all the players in the ecosystem, and understanding that there is actually a way to make this work, versus founders who have maybe like a surface level understanding of their business, which may surprise some listeners, but there's a lot of founders who don't really truly understand their business.
That's really interesting. I have met a couple founders who have developed products for industries they're not part of. Sometimes I think, I'm wondering from your perspective, do you ever see benefit? Like let's say I'm a healthcare data interpreter or programmer, and I do big data analytics for a healthcare company. But then I want to do something like create a video platform for consumers, or maybe do something in the insurance space. So I've got that like data background, but I'm moving into a new space. So, when that happens, you'll get some ideas that may not come from people native to the space, but at the same time, there is that lack of understanding.
Absolutely.
So what do you think? Has that worked in the past? Can that work?
It's hard to say because I haven't really backed any founders from that particular background. And maybe that's the answer, right? Like to the question, but that's why co-founders exist, right? I mean, there's a complementarity of skill sets that is required to run a business, and building a business is hard. Probably one of the hardest things that you can do in life, and figuring out product go-to-market, distribution, team and hiring, fundraising, clients, sales and marketing, and all those things in an industry you have absolutely no idea about, it's a very daunting task. So sure, could there be a person who has a very deep data background, a CTO who partners with the CEO with deep industry expertise and access to potential clients? Yeah, absolutely. Can a person who comes from 180-degree career change with no previous relationships in the industry may have a hard time getting off the ground? I'm not saying it's impossible, but they need probably to raise a little bit more money to hire the right people for the right roles there.
Yeah, that makes sense. I have some startup experience, worked for failed startups and successful startups. I've tended to see the pattern of kind of the left brain, right brain, two people running it, right? The really creative one, and then the more data-driven, kind of down to earth, ears to the ground. Here's how the numbers work. Is that just like a stereotype or a trope, or do you see that happen a lot?
A lot of the companies that we backed or connections of mine backed have that duality, where you do have a more down-to-earth CTO, COO type, and a more, we'd call radical optimist CEO, right? Like the ability to foresee a little bit into the future and believe that that state of the world can happen at some point, and that you're going to be the person who is going to move the world towards there. So very much so. And that's why starting a company by yourself as a solo founder is difficult, because you really don't have that dynamic where you can really bounce an idea with someone who's a little bit different than you, but is still equally as convicted and convinced that this company is going to work.
So you are a startup co-founder of a couple of startups. Which side of the fence do you land on?
Yeah, no, that's a good question. I like to believe myself that I'm the down-to-earth and very practical guy, but I tend to be very much leaning towards product. So at Flowlie, I am the co-founder and CEO of Flowlie Technologies, and I run accounting and legal because of my educational background, and product because of my product expertise plus industry experience plus my interest in strategy and customer strategy and figure out where there's a need in the market. And in order to do that, you have to be a radical optimist, because the world must change for you to be right. And you must identify some arcs of history that you're swimming with rather than against. And it would be difficult if you're too down to earth to acknowledge that.
Yeah, makes sense. So you, again, to go back to your background, you started in startup world, then went the VC route, and now you're back in the startup world, if I'm understanding it correctly. So what prompted that switch from startup to VC, and what did you find most surprising about that world when you got to the other side of it?
Yeah, so I mean, that's an interesting story there, because technically I started my career in VC, right? The very first entrepreneurial journey was still in undergrad. We put together a very interesting company over the course of about 2 years, and we had to at some point make a decision, like, is this something that we want to continue afterwards? It makes sense. There has some traction. That's where the opportunity for us to sell that company and get it acquired by another competitor came to be. We ended up saying no to that, looking back, pretty stupid decision, but it is what it is. You live and learn. Because our conclusion not too long after was that we don't want to do this full time. And it's really not something we're really passionate about. And even though it makes sense and we got more traction than, let's say, the average startup at that stage, up to a point where someone else was interested in what we were doing, we said, you know what, this is not really the case. So I started my career in venture, been investing for a while now, and then made the decision to jump back in the operator role. I've considered myself a builder throughout my life, been building small businesses pretty much since middle school and throughout high school, and then college twice. The second one was the one that actually got traction. So I've been experimenting my whole life, and it felt very exciting to be able to support other entrepreneurs and invest in them and provide as much value as we can to them. But at the end of the day, they were the ones running the day-to-day operations, and there's as much focus that you can have when you're trying to support 5, 10, 15 companies at the same time. So it just made a lot of sense for me to jump at some point back in the operator role.
Yeah. Did that so you left because you realized you weren't that passionate, or maybe you just didn't want it to be full time. Has that experience informed your approach to what you said earlier? You said the thing that jumps out of you is when a founder's really, really passionate and they seem super bought in and they know the industry. Is part of that because you don't want to fund somebody and then a year later they say, I'm not that into it. I think I'm going to go do something else?
Yeah, I mean, part of it is when you're getting VC dollars on your cap table and now you're committing to making probably a decade worth investment in your company, right? You're applying your strategy and aligning it with the strategy of venture capital fund, which operates in 10-year cycles, and you're getting funded. You're there for the ride, right? So not just for one series of funding, but hopefully for more, and growth significantly faster than you would do if you were a more traditional business or bootstrap or some of the more regular SMB that are not tech related. And in order to do that, you really have to think 10 years is a long time, right? I mean, most people live, right, probably closer to 80. You're probably not doing anything before you're 20, and you probably don't do much after you're 70. So you really have 50 years worth of work time, and dedicating a fifth of that to one project, like that's a lot of a time. There was this video I saw on YouTube a while back. There was this guy drawing this graph and kind of splitting life in small pieces and realizing like, hey, how much time we're spending on each individual thing and what really is life and its meaning. When you kind of take that perspective and you realize you want to spend 10 years of your life doing that, you may reconsider what's meaningful to you and what you really want to align yourself with. And VCs must, by definition, make only bets on people who are willing to do that jump. It's not a jump that a lot of people can do or should do, quite frankly. I don't think this is something that everybody should, we wouldn't be served if everybody was building a tech startup.
And when you say this isn't something everyone should do, you mean startups aren't for everybody is basically what you're saying?
I would say two flavors of it, right? I would say startups are not for everybody in general, but VC-backed startups are very much a subset of startups whatsoever, right? I mean, there's a lot of creators out there like Alex Hormozy or Cody Sanchez who are promoting this like boring business entrepreneurship. I think there's a lot of value to that. That is a startup. And I don't think a lot of young people are interested in starting laundromats or restaurants or coffee shops or contracting, businesses, fencing, you name it. So I think there's a lot of opportunity in entrepreneurship there. And there's a smaller subset of, I want to raise VC capital. I'm committing myself to 10 years of aggressive growth, which that very much takes a different skill set. Similar, but different skill set.
So typically the VC route, I mean, you're just looking for higher risk, higher reward, essentially, right?
I mean, the whole model is predicated on top of the power law. So you are seeing a ridiculous distribution of outcomes when you really analyze it from a statistical perspective. Like, it's not a bell curve by any means of imagination, right? Like, there's one or two companies in any portfolio that are responsible for the meaningful return of that. And VCs are looking for those outliers. And I think any VC who's preaching diversification at the core, unless they're a growth stage investor where they're saying we're just investing in Series B, Series C, etc., is not really doing venture capital in its purest form, right? Because the VC at its core is pre-seed and seed early bets in companies that don't have yet product market fit, that are hopefully at some point are going to be unicorns and return a lot of money to the fund. So founders who are, first of all, have the depth of vision to be able to see that and believe that that's a state of the world that can happen. It's plausible that it could work, and also have determination to run for 5, 6, 7, 8, 9, 10 years to achieve that.
I'm intimidated by the idea of being a startup founder, because from everything you're saying, you've got to have the vision, you got to have a kind of a 10-year plan. The multidisciplinary expertise you need to have, there's got to be management skills, finance skills, budgeting skills, team building skills, sales skills to get the fundraising. It is so hard. What have you found in your founder journey to be the most important, maybe educational resource or tool or like What skill have you found honing has been the most beneficial in helping you kind of move forward?
I don't think there's a skill, quite frankly. I think it's a personality trait. You just have to be excited about that, right? Like you use the word intimidated, right? Like if someone's intimidated by this journey, they should not start this journey, right? If someone's excited about this journey, they should absolutely do it regardless of their background, regardless of how much expertise they've built in something or how much skill set they have, because you're going to learn things and every single startup is different. And I've had the honor to be part of some of those journeys as an observer, as an advisor, as a supporter, as an investor. And you really like very quickly realize that there's no two startups that are the same, and every single founder is going through the same journey. It's a roller coaster. There are days when you want to pop a bottle of champagne and celebrate with everybody, and there's days when you want to cry in the bathroom, and it's okay. That's literally just what startups are. So if you're not willing and excited about that, you're not going to make past the first 10 crying sessions, right? You're going to give up. And founders who are excited about it just plow through it and say, okay, we're learning, we're hiring the right person, we're learning the right skill set to overcome this problem, and we're moving forward. And we don't give up. And that doesn't come from skill set, that just comes from personality.
That is an incredible insight. I want to turn to the less incredible aspects of how startups are, but real quick, I just want to interject a quick note for the listener before we get into the next thing. If you need to cry into the bathroom with a community of other people who sometimes need to go in the bathroom and cry, I just want to quickly mention a resource that I think could really benefit you. This podcast is brought to you by StartHub, and we have a thriving startup community on Discord. It's an active community where passionate minds come together to exchange ideas, collaborate on projects, and network with like-minded individuals. So if you're enjoying this podcast, then you will definitely find our Discord server valuable, whether you're a founder, an investor, someone who loves innovation, and whether or not you're crying or celebrating this week with your startup. So join us on Discord today. You can visit our LinkedIn page, StartHub, and also find a link in today's show notes, and we'll start building something extraordinary together. But I do want to turn to the less extraordinary aspects. So whether you're working with a startup on the VC side or just talking to people in your community, we talked about the things that you think are great, right? Getting excited, having passion. How about the red flags? Like, what's the thing that stands out and you're just almost immediately turned off by this whole idea?
High ego. I think it's a pretty easy answer. Yeah, but not in an off-putting way. I think all founders, by definition, have some level of high ego because they have to believe that they know something that is true that not a lot of people believe that it's true, right? So there's some inherent level of confidence of saying the world is wrong and I'm right, which comes with a little bit of ego, but there's ways to manage that and showcase that differently in conversations. And there's definitely been a number of highly off-putting people where they're not even open to any form of advice or question because they already know the answer. And that level of too much confidence is not serving you well, because at some point, as we mentioned earlier, you're going to face issues where you don't know the answer, and an inability to ask for help and just hold multiple perspectives in your brain that are conflicting at the same time and analyze them, kind of at cold, just won't allow you to move forward. Something's going to crack if only one person is right. And you can sense that in a half an hour conversation pretty early on. And that is very much a red flag.
That's so interesting. It does sound counterintuitive when you first said it, right? You got to have confidence, but there is that fine line. But there does require, to my point earlier about how many different skills you need to have to ultimately be successful. You need to have an intellectual curiosity, right? And an openness to even be willing to be proven wrong. And you probably don't have like a bullet point list of things to look out for in a conversation. You said you can just pick up on it. Like the energy in the room is just like right there. Was there a particular pitch you ever got on a call and just within a few minutes you're like, nah, this isn't gonna work out?
Several, but as VC is a small community, and everybody knows each other, I'll keep that to myself. But happy to chat over a couple beers. I will say though, I'll give the opposite example because I think praise should be more publicized. It's one founder called Myron. He builds a really interesting startup in Mexico called One Car Now. He's a tactical sponge, if I were to try to describe him in a way. He takes notes of every single question that you ask him that he doesn't know the answer to, and combines that with all the other questions other investors were asking that he doesn't know the answer to, and come back next call or even before that with an email with properly thought out answers to that question. Him having digested all the feedback and all the points where he may not be incredibly sure about what he's building, but in a week he is incredibly sure about that part because he had the chance to adapt it. So depth of vision, 100%. Ego, part of it. Ability to listen to constructive feedback and self-assess and move forward, 110%. And that's what makes him a great founder. And he's been incredibly successful. So as a result of that. And you know that. You notice that first conversation.
Yeah, that's a great point because a lot of people are probably afraid to have a conversation with a VC or anybody and get a question and say, I don't know. But maybe the takeaway from this should be, you shouldn't be afraid to say, I don't know. So sometimes that's okay, as long as you then follow up with your due diligence and come back. Because it sounds to me like you see that as a huge asset in this person, not a liability. So when he says, I don't know, you're not thinking in your head, all right, well, I'm done with this guy. All right, he's off the list, anything like that?
100%. I mean, at the end of the day, it's impossible for you to know everything, especially at the earlier stages. And if the answer, I don't know, is what you're building, yes, that is a disqualifying thing. If the I don't know is the answer to what is most likely going to be the best distribution channel for you to reach your target audience, I hear you. Okay, we'll have to figure it out. Do you have any hypotheses around it? Have you run any tests around it? Are you at least thinking of some opportunities that you could be running in the future? It's okay to not know some things, but every stage has different questions which have an I don't know acceptable answer. So I'll say that, pre-seed versus seed versus Series A, they'll change. If at Series B you still don't know what's your distribution channel, you probably screwed up somewhere in the process, right? But it's very much an asset. And I'll shout out another founder, Kevin Clausen, actually had it as a guest on my podcast around successful fundraise. And one of the tactics that he said is just radical transparency. Just being okay being naked in front of an investor and saying, hey, this is where it's at. This is my thinking around certain things. This is what I know and this is what I don't know. Address the elephant in the room because otherwise someone else is going to assume it. And build up a conversation because you want a partnership. You want the other person to challenge you and then together you build something, right? Like you're not have all the answers figured out and then you just asks for money.
I love the way you said that. These are great actionable insights from your experience. It's clear you have a lot of really fantastic knowledge around this area. So I want to talk about how some of it has been applied. You learned a lot in the VC world. I know you're more the data guy, but you must be excited enough to be really bought into Flowlie. So could you talk a little bit about why are you so passionate about what Flowlie does? And of course, share a little more about what Flowlie does as well.
Sure thing. I mean, Flowlie is the result of about 5 years of research and trying to understand. I don't think we've understood it yet, but we're making great progress around it, of why do we really have bad data in the private market, specifically venture capital, and why is it really hard to build predictive models of success and workflow automations at scale for people who are participating in this market. So to bring it down a notch, what we really do at Flowlie, we build two products. We build a product for founders and we build a product for investors. The product for investors helps them screen opportunities faster. So this is not a sourcing engine of any sort. They're not going on Flowlie to find startups. They use Flowlie in conjunction with other tools where they have access to startup information, to be able to capture more of those data points, benchmark them against the industry and others, surface insights that a human would take more time than a computer to figure out, and then track that opportunity from cradle to grave. Hopefully, it's not a grave. Hopefully, it's a positive IPO, and at the same time track all their co-investor network and figure out where are the most synergistic introduction paths for them. In the sense, they can predict which person in their network is most likely to invest alongside them at what particular stage, and leverage us as a source of truth and suggestion, a digital analyst, if you may, around that. The product for founders is relatively simple. It's a secure document sharing platform with built-in tracking and engagement analytics. Think of a DocSend or a BriefLink, if your audience is familiar with that. We have that and more. And on top of that, we layer this network intelligence where we're able to predict the degree of interest of an investor in your startup before you even have the first call. And from there, predict what's the best way to leverage that investor and that investor connection moving forward. So with time, we're building a fundraising automation tool, but in no way automating your outreach, but having a team dedicated to fundraising that's fully digital, where you as the founder can spend more time building and less time fundraising because you have a personal assistant in a box. And the reason why we're so passionate about it is because we've experienced these problems on both sides of the equation. Nobody has solved it. Everybody who tried to build in this place is building point solutions that are by definition not linked together. Venture data is siloed in 10, 15 different tools per firm. And when you look at that, you're hiring a data scientist and tell him, hey, analyze this and help us do our job better. He's going to scratch his head because there really isn't a great place to start. So we're coming and unifying all those data sources, enabling even not a data scientist to act like a data scientist and help them make better and faster decisions, which at the end just builds more efficiency in the market, allows people to be invested in faster from both sides, right? Because founders discover the best investors, and then investors can figure out what startups they're talking with and which are the best earlier and faster.
And if I'm a startup founder today, can I go check out Flowlie? Is it live yet?
So right now, the product is just making its way out of the open beta and starting to have some of the features being gated. It really depends because we're running a lot of different experiments on where most of the value accrues. But in general, there is a paid plan and a free tier, and there's always going to be a free tier. So you can always go to flowlie.com, create a profile, and start sharing it with other investors. And if you're already using DocSend, there's a free alternative out there. That's Flowlie. So everything else is on top of that.
Cool. And what did you learn in your VC days that really informed the decisions that you made when you decided to go the Flowlie route?
Flowlie builds for the industry that I've been in. So by definition, there's learning about how to run a startup and learning about the industry itself. Flowlie would have not happened without the experience that I had in venture, because the amount of time that's being wasted moving data points from one place to another and running analysis that could be done significantly faster. And our public markets counterparts have all the tooling and have all the system, and we're really lacking behind. It's ridiculous. So when you're looking at how much people are paid in comparison to how much time they work on truly value add things, like sourcing, decision-making, and helping your portfolio versus arguably non-value add things, which is moving pixels and data points from one place to another and reorganizing files and transcribing notes and moving notes from one place to another and combining research papers together. That's really the genesis of Flowlie, saying there's value in replacing highly educated human labor with computers and allowing those people to focus on more meaningful things. And ideally, that's going to be value generative for all the venture ecosystem, because more founders are going to get the right investors and more startups are going to be created if the market itself is more efficient. And we decided to do that without building a marketplace, which is a really important thing. And that is an insight that we got from marketplaces are hard. like don't build a marketplace unless you know how to build a marketplace, or unless you have some ridiculous demand and supply hack. The cold start problem is real. And there's self-selection bias. There's just so many things to marketplaces that are not really the most accessible startup to start. So we took the route of not a marketplace, but still trying to build efficiency in the market. And all of that was breaking on our experience in VC.
Nice. Well, if you're a founder who's looking to raise VC money, then check out Flowlie for your secure document sharing. It's flowlie.com, Flowlie. And Vlad, earlier you mentioned a podcast. Where can people hear your amazing podcast, and where can people follow you for more amazing insights? Because you were a wealth of knowledge today, and I'm sure people want to know where they can connect with you.
I really appreciate that. I would say more recently, Instagram. With CAZVLAD, recently made my profile public and transitioned from, friends and family to like the larger audience because of the podcast, and sharing a lot of insights from the things that we're learning there, as well as Flowlie. So that's a good place for, I would say, several posts a week, but also LinkedIn. That's where I'm most active, and that's Vlad Cazacu, VLAD, CAZACU. Happy to connect or follow there. And in terms of the podcast, probably for your audience, most relevant would be the fundraising debrief. That is available on all major streaming platforms, as well as YouTube if you want the video. And you may get some shorts and clips on Instagram and LinkedIn if you're following there. But that is a podcast completely dedicated to doing a debrief of a successful fundraising round. We only invite founders who have recently raised either pre-seed, seed, or Series A. And it's a very open, naked fireplace conversation. We're not really naked. It's just very transparent of how that round really came together. Because I feel a lot of people may fall into the TechCrunch illness, I would say, of everything is easy. Nothing wrong with TechCrunch, but they make it seem that everything happened overnight. And we really wanted to demystify that a little bit and dig deeper into a 6-month raise and how it happened. So there's a lot of really great entrepreneurs coming there to show you how the round really came together. So some people may get a lot of value for that if they're preparing to start fundraising.
Terrific. Well, we will include links to all of that in the show notes, which basically means the description of this episode, wherever you're consuming it, YouTube, Spotify, Apple Podcasts, etc. I'll make sure to get all those links. I may have to email you for a couple links, but this should be able to find most of them on my own. But this was I thought, a compelling conversation. I really hope that our friends in the startup community and in the StartHub community got a lot of value from this conversation. And we'll be keeping an eye on Flowlie, because I imagine anybody checking out this show is going to be hearing a lot more about your work in the future, and hopefully working with you. So thanks again for joining me. This was great.
Thank you, Cody. Really appreciate the invitation, and hope this was helpful.
The Funding Blueprint is brought to you by StartHub. This episode was produced by me, Cody Goff, with audio and video editing by Sean Patel. If you're looking for sound design or audio-video production work, get in touch with Sean at seanpatel.com. You can watch The Funding Blueprint on YouTube or Spotify, or listen on any other podcast app. And if you're listening on Apple Podcasts, then please open up The Funding Blueprint, scroll down to where you can rate the show, and tap 5 stars to leave a quick rating. We really appreciate it. Thanks for joining, and have a great week.